Daily trading recap. Let's get after it. It's Monday, the 28th of February, 2022. Hard day in the P&L again, but coulda, shoulda, would have been harder. But yet again, here we are at this crossroads with this strategy that I've been going after, chasing volatility in the early open of the S&P 500, and just continuing to fine-tune this strategy and understand the limitations and my pitfalls, downfalls of even structuring this strategy and bringing it to live trading. So I'll get over some dollar volume market internals first before I go over that. NASDAQ, $201 billion volume as of 16 minutes after the close here. And I see $356 billion volume. OTC is $2.5 billion volume on the day. No other equity trades for me, no other listed plays. Just seeing a few. I'll just mention MLUN going absolutely insane. 145% showing here at the close. Chris with a nice little trader on that one. I believe he's still holding a little bit and a few other little stragglers, but nothing else holding my interest like crazy as of right now. Just still devoting a lot of my attention to the spreadsheets and to the application of what this strategy currently is and what it could be in the future, and also taking in the fact too, as I'm going through all the data and reflecting on the 2012, the 2013, 14, 15 periods of certainly a lot less volatile opportunity. It's not anywhere near as insane, as drastic as percentage moves intraday, even in the morning session of what I'm looking to trade that way. So understanding that with the strategy and all the preparations I'm making, as well as putting the investment in on the lifetime license for my Ninja Trader and doing the other things of the investments in my data and time spent that way as well. So keeping those factors in mind and understanding that what I'm doing right now and what I feel like I'm seeing at the opportunities there is, of course, always going to be there. It's not, of course, always going to be there. But as the iron is hot, now's the time to strike and do things as they come. Alexa almost just wanted to come on, and I'm about to prop her again because I just said her name. But coming into today, came in very convicted because of hard gap down on that Sunday future open. And then we come in on that Sunday, as I'm doing preparation for today, I came in with the expectation of, if we continue that range downward, continue this little bottom range price action from this pre-market today, I would be less convicted or involved in a volatility spread within the first 15 half hour of market open, because I would feel the overall sentiment would be that we'd be closer to the end here, this 410 range, and closer to that's way too far of a daily. Closer, still too far. There we go. Closer to that end range of potentially breaking to new fresh areas of space to be intriguing new price action, versus should we have the move like we had in this pre-market today, where it starts to curl back just a little bit back into this range of just kind of mass confusion and, okay, where are we going to go? What is the geopolitical conditions that we're in right now? What's Russia doing? What's Ukraine happening over there? Just everything with inflation, of course, that's always going on. How do those factors align? But even more so now of that volatility aspect. As we're still in this volatile range, I felt even more convicted to say, okay, sweet, I think there's just going to be more confusion about what could potentially happen or what direction could be from the gate, because that's exactly what I'm trying to play. I'm trying to not be directional, but guessing on that there's going to be a change of directions very rapidly within that first 15 minutes, half hour of market open. Missed it by that much. Came in looking for 3 points immediately as I'm placing my order, with seconds before market open, looking for 3 points on the futures aspect, below that open price and above that open price, and adding that to the tally of just a hitch in what this strategy is now that I've refined my time frame of the strategy, taking away from all of intraday, which would have ended up putting me profitable on the day if I had enough margin to take this unrealized loss all the way to 438 on SPY here. But now that I've shortened down the time frame, now I can look at it and say, lots of trader thought of, okay, yeah, now I'm looking for this specific move here because I'm looking for lack of direction and rapid changing of direction beyond that open price within very few minutes from the morning bell. So when we get to this state where it's very incredibly dependent on seconds, milliseconds of timing with when I place my trades and when I place then the limit orders that potentially getting filled and what I'm looking for, it's in moments like this where we'll pull it up on the actual sticker itself of, as I'm looking for 3 points right before that market open, and sure enough, as we dump within seconds to that point where I'm coming into this one thinking that we should be getting at least a minimum of 10 points above and below the open, because that's the volatile times that we are in right now. That's what we were showing Friday. I mean, that's what the data is compared to the data that I do have back to like 2012 of just like, hey, now's the time to start striking this type of strategy harder, and then maybe extending your time frame even out a little bit more and having the margin to take these unrealized loss, because now I don't have to pick direction. I can just pick the probability that we are just going to be volatile and trading it that way. But when it comes to trades like this of me literally missing getting filled or not even being me not taking a loser versus me kind of getting away with a little decent winner is almost milliseconds at this point. So now coming into today, after I've gone through I have taken finally the step of getting the lifetime license with the NinjaTrader and being able to now, once I place that order, that limit order can be set immediately once I get filled, exactly however many points or ticks away from that I want. And we can avoid these trades like this today where I end up getting, okay, I immediately get filled with my profit target order on the long side, but for the short order that, if I was just a few seconds off, I barely miss this little bottom fill within this first minute here, and then I have to sit through all this new highs is, okay, now we're getting to this 10 o'clock time frame. Am I going to be wanting to hold here? Do I think it's going to come back down? Do I want to risk it beyond my data that I have and try to play my cards that way? It just becomes an ever-growing game of trying to fine-tune this strategy that way. And then the other thing I wrote down in my journal too that I want to throw out that's just revolving in my head of how tough this strategy is to then try and say on the loss days similar to this, like if I was looking for 5 points, whatever, and of course it wouldn't have reached that far from that open price. On days like that, when it's the 9 out of 10 times that it doesn't end up happening, the losses are just unfortunately have to be so much more gargantuan and really out of control of my hands of what I can set the risk factor at. It's just all determined on time. So then that very much so kind of screws with the strategy and just mindset on days like this of, okay, is this strategy really worth it? How can I find the consistency of those days that do end up working and paying out and building up a collection of those days to be able to sustain a loss on days like this, in reference to days like this of, I should have gotten filled, whatever. But is the strategy actually feasible over the long term? Does it actually pay out? Even though it has an awesome, sweet, high win rate of what I can set it to or define it as, but applying it in actual live trading, am I able to get filled at those prices and do the 1 out of 10 losses or even less than that end up offsetting all of the wins entirely, because it just has to be so gargantuan, and the days that it does become a trend day actually end up just eating so much more. Me taking a profit on the long side or vice versa if it's a short and it's just absolutely dumping, offering no upside whatsoever, on those days like that, it's just almost meaningless for me to be taking any profit when it's going that way, because it's going tens of points against me, right? And it's not even like the little I try to add in the variable of, okay, I'll add a layering effect of, hey, I think we can reach to 3 or 4 points maybe above and below, but I'm not. Then I'll add, I think it's more probable that we get to 2 points above and below the open, and trying to do that, and then saying, okay, well now I'm definitely securing, because I think it's going to be 100% chance that we do end up dumping just like 2 points above and below. But then in reality, if it doesn't even go 2 points, or if it does go 2 points, but then just goes 20 or 30 points to the other way, what was the point of taking that 2 point little trade there? I'm just kind of wasting margin at that point. And it is definitely a weird, interesting little strategy. And I'm not done with it yet. I don't think it's ready for the trash can at this point. I still think there's viability to it. I just think this was a tough Monday. I think Mondays are an interesting one of looking at the data too of Mondays have like a least probability of one of the lesser probabilities of even producing any real move one way or another, producing simultaneous action to both sides. But when it does, it ends up being very large, similar to Fridays. So Mondays are kind of a special character in which, compared to Fridays, which are more categorized by, hey, we are just kind of volatile, don't really know where we're going, volatile days. Mondays can sometimes lean to be trend days, but also can be volatile days, as we're coming off of the weekend there for the rest of this trading week. So just continuing to pay my dues and continuing to show up. I'm not dead yet. It hasn't killed me yet. I certainly can't continue to sustain these types of losses over and over again to this size, but it's just the refinement. I do feel there's something to this of just the automation factor that is there, the not unemotional factor that is there to it, just going plainly off of the probabilities of, hey, wow, it's been producing volatile action within the first 15 minutes of market open, within the first half hour of market open. I'm just playing that. I've screwed myself over, and especially in the past week here, the past few weeks, screwed myself over trying to be scalpy and directional on the S&P 500 itself, and I'm done trying to play that game or think that I'm even in the realm of being able to do that for this type of trader I am, with no other Bollinger Bands or stochastics or any other metric that I'm going off of that way, just the whatever I'm picking out of the hat at that point to try and get long or short, and just screwing myself over that way. Going back to the basics of this is a fully algorithmic trade, unemotional, and I really do feel it's just about defining and fine-tuning the execution of that process and the, what you're going after, that attack point. So yeah, I do not think it's dead yet. I'm certainly not dead as a trader as of yet. Today's loss was encouraging me and invigorating me even more to ramp up my energy in this field of trading itself and just my growth of who I am as a trader. And I'm very excited for the future with it. So I mentioned those points. I did also write in my journal how I also was very convicted in this trade today of I thought it was going to be on the low side of looking for 3 points above and below the open because of how many times we were changing hands in pre-market over VWAP. Okay, buyers had control. Of course, sellers had control over the weekend or on the Sunday's future open. Okay, now we're getting to buyers, sellers. It's not a crazy amount of volume, but okay, buyers look like they're in decent control here. Okay, hard sell-off. Now we're just kind of trending right under VWAP. Tries to attempt a little perp above, but then dumps harder below. Tries again to break above VWAP, but stays below. Okay, now we're back to the upside above VWAP before market open. I thought that indication was feeling very convicted in my book of, okay, great. There is no hard, true direction picked as of yet. Everybody is still very much so trying to align themselves or getting ready for whatever the market has in store for today. And I thought that was going to allude to great amount of variability, volatility within that first 10, 15 minutes at least, but it just did not really have any hard break to the downside of that open first minute candle from the open there to play into my strategy at all for today. But then I mentioned that I'm taking this automated for sure, and it's really on days like this when these types of trades come down to matter, it is those milliseconds compared to me today when I'm placing the order, and then I have, of course, to take the relative other side of the trade in the MES, which now I can, as I'm still figuring out, do that with OCO orders, but then also using that on top of being able to place automatic profit target orders compared to me today of trying to get both long and short in the respective instruments, then look back over to see what my fills were, then correlate that to the actual prices that I want to get for profit targets, then set the limit orders for those and type those in correctly, make sure they're right, and then the right order, the quantity amounts for each of those, and set those out correctly. I mean, it can end up being 20, 30 seconds as I'm looking back at the log there for what it was, and that can be absolutely 100% critical. The fact that I'm getting filled immediately on that long order is key enough for me to say that this, if I'm going to try to push this strategy very algorithmically in the future, I've got to get more. I got to get faster with these executions on what I'm looking to scalp here if I'm really trying to play it and just stay safe. Because today could have been a winner. I'm not saying that I would have gotten filled for how quick that price action would have been there, but I certainly would have had a far better chance of having the order in versus me doing the, okay, what's my order? And typing in a 4341, blah, blah, stupidity like that. So I think that's all I had for that strategy itself. I also wanted to mention a little site I saw, 1034 candle here. Coming back closer to this high of day on SPY itself. Then we get this huge, not so much huge on the SPY itself, but bigger volume red candle at that breakout or new market day intraday high attempt, and just starts selling off hard from there. And then seeing that on the tick as well, tickaroo, this thing shows as just a huge rejection heel, this 1034. We're trending pretty nicely in the green on the tick for how many companies, how many charts are having a currently green candle print within the minute. It just all of a sudden goes from 600 tickers doing that to negative 400 tickers doing that within the minute and very rapidly. And I think I actually alluded that to, or I said something about that on Friday. I believe I saw something similar to that of candles like this at 10:22 here on Friday, and then these two candles here at 11 o'clock, 10:59. That hard selling coming in as it's just almost at new highs here, trying to put in newer highs, but then they just continue on to push new highs after that. So had I been and actually pushed the button there, I was very tempted to just start once again like I did on whatever that 2.2K loss day was. I think that was that 2.2. No, the other 1K loss day that I was just stupidly pushing buttons with ES up and down trying to scalp it. I was tempted to do that same thing again to try and reclaim the losses because it's just so easy, right? All I need is like 6 points and I'm back in the game, right? If you want to get out of the hole, put down the shovel, right? So did not push those buttons again, but had I pushed that button, and I mean, it was actually a substantial thought, a trade inquiry at that point of, okay, we did see, this candle here. Okay, I've seen this before, seen this on the tick. I have a pretty decent risk reward if I'm buying pretty much right at the bottom here. If it starts to break to newer lows, okay, that I was wrong at that point, but I probably would have taken it only for 6, 7, 8 points at best at that for that one. Would have been right here. Yeah, buying at the bottom, 4,338. Maybe, I definitely would not have been holding to all the way to 4,360, which is an incredible move. Did not expect that to happen all the way up to there, but 4,345, I probably would have taken off for that little trade, but that's just something I saw as well too. So that could be a potential play, nice little scalpy trade in the future as well. If I ever see that or identify that, if we're coming onto new highs and then just a huge tick, huge amount of selling, seeing that on the SPY volume and ES volume and on the tick chart as well too for companies and charts printing in the red within that minute candle. That could be something to play off of for the future. But that is all I had for today. Continuing that grind. What doesn't kill me makes me stronger. The thought came to my head too of how many other millionaires, whether it's podcasts or just interviews that they've done too, of them saying, I don't know why this is the first time that I thought of it, but when they've said, oh yeah, you definitely need to blow up like at least 2 or 3 accounts until you become successful. And I remember thinking that just very early on in my career. And I mean, even months ago, of my mentality of, why would you ever want to do that? Like, that just seems stupid. Who could ever there's plenty of other people who didn't have to blow up their account before they became successful, before they found consistency. But I'm just going through the thought process of, I mean, truly, even if I blew up this futures account that I've been trading with, I would still be fine. I'd still be here. I mean, the blessings and liberties that I do have of my current living situation and just, I mean, even the truth of reality, even if everything was taken away from me, I would be totally fine. And I'm 22 years old. There's still so much life ahead of me. Even if you take everything away from me, I'd almost come back stronger at the end of it than if just currently going at the rate that I'm at right now. It's just that motivation factor. And like today too, for taking that loss, it just invigorated me more to get back in the game and just put in more work. And I've alluded to that other times in other daily trading recaps that I don't really want that to be the case when I take losses. That encourages me to put more work in. I want every day to look like that, of just always putting in more and more work and pushing myself to be better. But certainly not discouraged, and it's not killing me, and I'm ready to go after the next one for sure and excited for it. That is all I had. I sincerely thank you guys for watching. We will catch you guys on the next one.